A recent Motley Fool article made this really bold claim that it's possible to find stocks that could give you a 1,000% return by 2035. So how on earth do they think you can turn 100 grand into $1 million? We're going to break down their exact formula and take a look at the two stocks they believe could actually pull it off.
Okay, so the goal here is simple, but wow, is it huge. Turning $100,000 into a cool million. That's a 10x return. It's the kind of life-changing investment we all dream about. But let's be real, how realistic is it?
So, the big question is, how do you even start to look for a company with that kind of potential? Well, according to this article, it's not just about getting lucky. They actually suggest there's a specific formula for hunting down these future giants.
The article lays out a whole three-part strategy for spotting these kinds of opportunities. So, let's dig into the framework they're using to analyze the two companies they're so excited about. All right, just so we're all on the same page here, when we say 1,000% growth, we're talking about a stock multiplying its value 10 times over the next decade. Crazy, right? Now let's see this formula they think can find them. All right, here it is, the secret sauce, their three-step formula. First up, value. Is the stock at a good price today? Second, you've got growth. Does it have a clear runway to keep growing for years and years? And third, and this one's key, size. Is the company small enough that a 10x jump is even possible? Okay, let's see how they actually put this formula to work.
First up to the plate is the electric vehicle maker Rivian. The article basically holds it up as a textbook example, a company that checks all three of those boxes.
And they really don't hold back. I mean, look at this quote. They make a super direct, super powerful comparison, framing Rivian as maybe, just maybe, the next Tesla. Okay, so let's put the formula into action, starting with size and value. First, check out the market cap. That's basically the company's total price tag. Rivian's is just a tiny, tiny fraction of Tesla's. That's a perfect check mark for the size box, right? It means there's just so much room to grow. Then, for value, look at the price-to-sales ratio. Rivian's is more than 5 times lower. That kind of suggests that, for every dollar of sales you're getting, it's a much cheaper stock to buy into right now.
Now for the growth piece of the puzzle, just look at this. According to the Wall Street estimates they cited, Rivian sales are expected to grow almost twice as fast as Tesla's next year. Now that is the kind of engine that could power a 10x return. So here's the bottom line on Rivian. According to the article, you combine that smaller size, the more attractive price, and that faster growth, and boom, they argue Rivian has a really clear path to those potential 1,000% gains. Okay, let's check out their second pick.
All right, the second stock they dig into is NuScale Power. And this one, well, the article presents it as an even bigger, more ambitious idea. But, and this is a big but, it comes with a lot more risk.
Yeah, the ambition here, it's just off the charts. We're not just talking about shaking up an industry. The article is suggesting NuScale could completely change the game for how we do nuclear energy on a global scale. So what's the big idea? Well, on the left, you see traditional nuclear plants. They're enormous, crazy expensive to build. But NuScale's big innovation, on the right, is all about these small modular reactors, or SMRs. Think smaller, cheaper, and way more flexible. That's the tech at the heart of this whole investment.
So, let's look at the size factor again. NuScale's market cap is just $6 billion. Now, for a company that wants to reshape the entire world's energy grid, that's actually pretty small. And according to the article, that's exactly what gives it the room for that potential 1,000% pop.
Now, this isn't just some fantasy on a napkin. The article makes a point to say that NuScale is the only company of its kind that's gotten the green light from the Nuclear Regulatory Commission. And with reactors actually being built, they're aiming to have their first system up and running by 2030. So yeah, they're making real moves. But, and you knew there was a but, the article is super clear about the risks here. I mean, this is the definition of speculative. The tech isn't proven on a massive scale yet, the demand is still mostly on paper, and yeah, if this doesn't work out, investors could lose everything. It's the classic high-risk, high-reward play. Okay, so just as you're trying to figure out which of these two you like more, the article throws in this fascinating final twist. It's a really important piece of context that kind of changes how you look at the whole thing. I mean, after hearing those pretty compelling cases, you'd think the answer is a simple yes, right? Are these the stocks to buy? But the author poses this very question, and it leads to a really surprising answer. And here it is. Get this. Despite all that incredible potential we just talked about, NuScale Power did not make the author's official top 10 list of stocks for investors to buy right now. Whoa, now that is interesting, isn't it?
So to explain why that top 10 list is such a big deal, the article points to some of its past home runs. They show how picking stocks like Netflix and Nvidia way back in the day could have turned $1,000 into an absolute fortune. This is basically their way of saying, hey, this list is a big deal, which makes it even more telling that NuScale isn't on it.
And the last piece of data they drop is this direct comparison. They claim the average return of their stock advisor picks has been a whopping 1,004%, just crushing the S&P 500's 194% in the same time frame. This is their mic drop moment, the ultimate argument for why that top 10 list matters so much.
So, when you boil it all down, we've just walked through this really cool formula: value, growth, and size. It's a powerful way to think about hunting for those potential 10x stocks. The article uses it to show us two fascinating but very different companies, a fast-growing EV maker and a super high-risk energy disruptor. But maybe the biggest takeaway is that even with a great formula, the riskiest bets don't always make the final cut. So it leaves you with a really important question. What's your formula for finding the next big winner?